Hello traders, it's ETM Effects, and in this lesson we're going to randomly backtest the silver bullet strategy step by step. So let's start this example by EUR/USD. So first thing you want to do is you want to look at your macro. So let's play the price out. So nothing interesting as far as the macro. Let's play price out a little bit more. 7, 8, 9. So nothing interesting. Price is literally consolidating. Neither the high or the low of the day's been made in our New York session peak, so we're going to continue. Okay, we have a rejection. Eight, 9. Okay, so we had our HOD. It was formed in our peak, so we would be looking for a continuation, and our low of the day was previously set. So we are looking for a reason to take price short. So what would I be looking for? I'll be looking for a stop hunt. Be looking for price to take this level. Then we'll pull out our 50%. And we'll take a trade once price reaches 50% and take the trade lower. Our first TP would be our first swing. Our second TP could be this swing or it could be this level. And price never went for the stop hunt. It just dropped. So we would skip this day and move on to the next day. Okay, nothing interesting. Let's play on. Okay, we have a higher time frame stop hunt. Okay, so what do we have here? We have a low of the day. The low of the day's been set in New York peak. That means we are looking for a reason to take price back to the purge. And then whatever happens from here, you would take your TP here or you would take your TP at the swing because price might just reverse from our macro purge. So now I would mark out my swings. I have a swing here and I have another swing here. Okay, let's see if price comes back into the range. Okay, price came back into the range. And it would be exactly at our previous swing. So once price reaches this level here, you would be waiting for a buy. And this would be almost a 2-to-1, be a 1 to 1.6. Why this level of TP? Because this will be my next danger zone, be this internal liquidity here. LTP way before this. Okay, you're in and your TP is right here and your stop loss is right here. Perfect. So for the second example, we're going to use USD CAD. I'm just marking up macro levels just as a guidance basically for directional purposes. So let's watch price play out. Okay, so we had the low and the high. Now the low was set in this previous session. We have the high so far. What do we have? Maybe take the front. Okay, so we're currently at our high of the day. Let's go in our lower time frames. And what are we looking for? We are looking for a stop hunt. Take out this swing, come back into the range, take advantage of the ride down. And of course, our entry would be the 50%. That's your TP. This will be your 1-to-1. The only thing terrible here is how tight this range is. If you're trading with any significant spread, you wouldn't be able to make this trade profitably because let's say you enter as price is dropping down, it would kick you in somewhere here where your risk to reward proportion wouldn't be fair. Just for the simple fact that I don't see a significant second TP. My second TP would be somewhere here, would be this reaction, but asking price to reach all the way down here from here would be asking for too much. So let's play price out. And that was the high of the day. Price did sink for the rest of the time. Am I looking here? I don't see a reason to take price long as far as the macro goes, but the lower time frame setup does look good. But as far as the macro, it just makes no sense to take price lower as price will. I mean, take price higher as price is more than likely to might kick back higher, go for a pullback, but will continue lower just because these levels. So we'll skip this day. Yep. Let's look at our macros. What do we have here? Here. Okay, let's see. We have a reaction. A reaction here. So we prefer. So let's play out. Let's play the price out. At least we have a little bit of context. Okay, excellent. Time is it? 1 o'clock. where we are at our high of the day. Our high of the day. So let's wait for the 10 a.m. Okay, price played out and rejected. Almost engulfed. Not quite. What are we looking for here? We're looking to take price lower. Why lower? Because we have a tremendous amount of range. This is the low of the day right here, which was this base right here. And this is the high. So we're trying to take price at least to this level. What are we looking for? We are looking for a stop hunt. So we're looking for this base here to be taken out and use our 50% to get in a trade in the middle of the range and continue lower. That's if price decides to stop hunt this level. Here we have a stop hunt. Price came back into the range. Pull out our fib. And our entry would be in the 50% here. Our TP could be these relative equal lows. Our second TP could be this level. Third. And of course, the final TP would be the macro level. But let's see if it plays out. Should though. Okay, we took a loss here. We could re-enter once price revisits this area. So right now we're negative 1R. And you could enter right here and have your first TP here, your second TP right here at this low. Our second TP could be right here. So your first TP hit, your second TP hit. Let's see if price would reach your third TP and then your final TP. Just because the range is available. Okay, reach your third TP. Let's see if it reaches our fourth. And of course, once price breaks this base level, you'd want to get out of the trade, even though you probably already took partials as price was dropping low. So let's look for another trade. So overall, you're still positive in that trade, even though you took a negative 1R loss earlier. You made it up with the 3 and 4. Look at where price is on the macro. Okay, so price made its low of the day, but I'm not a fan of the position of this trade. The macro position of this trade, so we're going to skip this day. Even though the trade did work out, but that's fine.